Good evening. I'm just going to jump on right now and do a quick audio visual check. If you could just confirm in the chat area on the right-hand side of your page that you can see and hear me correctly. You've got a couple of meerkats on the hunt for an investment property in front of you, and I've been talking for the last few seconds. I have just confirmed a URL over in the chat bar that you can actually click on to get a very nice, clear how are you, Thomas? A big shout out. I'll ask a question in a moment about where everyone's from. Feel free to jump into the chat. I'm going to keep it really interactive tonight. But if you do have any audio visual problems, use that YouTube direct Hangout link, which has a really nice clear resolution on there. Thanks, Christy. Scott, thanks, mate. Louise, Misha, thank you very much. I'll pop things back on pause and get started in a few moments. Okay, let's dive right in. My name is Jacob Field. I look forward to taking you through a bit of a deep dive this evening into what we've been seeing in our internal research for the month of June. But I'm really going to throw open the floor this evening. I suppose it's a choose your own adventure, which we will be undertaking together tonight. I wanted to really just talk through the report in really open terms, in terms of our June pinpoint predictions report, and throw the floor open to any suburbs or areas that you guys would like to focus on in particular, and let's keep this really interactive. I'm really looking forward to taking you through this format tonight. It'll be great to really work as a group and get some cut through a lot of what we've been seeing in the media and out there, with some actual practical and applicable advice. So it'll be very nice. Lots of you on the line tonight. It's really exciting to see. It's a bumper turnout, pretty much a record attendance this evening. I suppose everyone's been wondering what's going on with the election and really keen to sort of see what's happening in the investment space in the cold winter months. So lots of you online. I've got a bit of a poll that I just activated, which I'll go through the results now before I jump in with a bit of an intro. But just a bit of housekeeping first. There is a URL that I did share over in the chat bar, which is something that I've done a bit of digging around and investigation. If you do have any audio-visual issues, pixelation, cutting in and out, you can click on that link and go directly into YouTube Hangouts itself. Far higher resolution usually achievable from there, but you don't get the ability to chat and interact over there. So yeah, if that's a worst case scenario, but a lot of you, thanks Garif, another webinar, I love it. Lots of you on the line saying hi, Waylid, Peter, James, Renee, Scott, a big thank you to all the nice feedback and a lot of familiar names there. Joe, how are you? Lots of you from New South Wales, so 51% from New South Wales. It's generally what we usually see. Interesting tonight, we have seen a dramatic and continued increase in investor interest in New South Wales itself. So you guys, 50% of the audience from New South Wales, mostly not looking at investing where you live. 5% from Tassie, big shout out there. 17% from Victoria, 12% from Queensland, and a dribs and drabs in a few, 2 and 3% from the other states, 7% over in WA. So if you've got any particular towns or areas that you are in, let us know, and we can talk around what we've been seeing, and there might be some they might be coming to the fore in some of the pages that we go to. Okay, jumping right ahead. For those that don't know me, I'd love if you jumped into chat and let me know how you did come across Ripehouse. If you've only sort of seen us in the last week or two or the last month or so, let us know how you found us. Let us know what you've been seeing in the site. I'd love to get some feedback. I'd love to create a bit of a dialogue and communication going forward. So let us know if you are. Put your hand up and let us know if you are new to the space, and I can help you, and we can guide this evening towards that. Just a little bit about me. I have been investing for about 15 years. Still own property across the country. Really default back and describe myself as being a DIY property investor. So I love empowering myself with knowledge and understanding and research. And I've got a technology background, so it's all come together to form Ripehouse in 2011. I'll skip through all this quite quickly because I really wanted to get to a nice big chunk of meat tonight for us to all go through together. But yeah, that's a little bit of an introduction to me. Just about tonight's content and some the Ripehouse news desk. We are and have finalised our June edition of the Pinpoint Predictions report. So this is a monthly report that we go through the absolute best bits of our research and put it together for you. We don't leave you asking any questions. I've noticed Hobart has been getting a lot of airplay in the last month or so from experts and researchers, etc., in the field, but they don't really fill you in on the details. Which suburbs, which streets, and the whys, is it going to be appropriate to your strategy? So we really go into a lot of detail in these reports and help you digest these area recommendations, the suburbs, the streets, and the individual property types to target. And then we relate it back to you on, is it going to be relevant to your strategy? So it's a coffee table book. It's an end-to-end research piece that comes out every month. We were ready to go about a week or so ago, but then we did do a just final check of the data before we released it, and things had changed slightly. So we try and keep our relevancy and data absolutely time perfect, as close as we can get it to release, and we did push it back a few days because we wanted to perfect it and get that right. So watch out for your emails in the next day or so. I'll pop a link through to be able to view that report, but for those of you who are already in the platform, you can jump into your dashboard, and that is already there for you to download if it is available to you as part of your membership with us. We've got some really interesting investor interest research. Let's do a growth deep dive for June as promised, and a detailed case study. But yeah, let's choose our own adventure. So I'm going to not open the net up as across the whole country. I am going to base it on our mechanism for finding growth suburbs. There's about 130 at the moment across the country in varied locations and local government areas and suburbs. So we are going to use that as a baseline, and then we'll divert our attention based on your feedback. So get into chat and let's keep this really dynamic. Wonderful. I'm just going through a bit of feedback here from how you guys have found us, and some interesting and varied sources. So really good to hear, and big shout out to those of you that have a couple of years from Glenn Foster in Lane Cove. Big shout out. Glenn actually sold the only house I've ever sold back in Lane Cove in 2014. So that was a great decision. And he's a great agent. Jane Slate Smith, a few of you from her. We've got a lot of respect for each other and do a lot of work together. And nice to see some new faces and arrivals. Welcome. Look, this slide here that I've got in front of me, I will dive into it, and I will try and keep in focus tonight. This is some research that we do pull and we collate this. It's unique to us in terms of we monitor you guys, the users of our platform, and is growing very fast in terms of numbers and actual interactions with our platform. And from a pure audience, there's no owner-occupiers, or first home buyers or renters, etc., using the platform. You are investors looking to invest. Where are you looking to invest? It's really interesting to see that momentum and those eyes and that gaze shifting. Without getting right down into the nitty-gritty here, just taking it at a nice high level, we've seen incremental decreases in investor interest in New South Wales. That has continued into May and now into June. We've got Tasmania, Victoria, and Queensland really punching above their weight. Lion's share of investor interest towards Queensland. Really interesting graph. We've got per dwelling investor interest. So Tasmania, Queensland, right up there in terms of per dwelling investor interest. So yeah, a lot of eyeballs shifting, not in raw terms, in terms of the groundswell of interest, but in per dwelling numbers. Tassie's only got 500,000 population. A lot of eyeballs shifting towards Tassie. Queensland is still obviously a large state, and per dwelling interest is very high. So just a huge groundswell of interest in Queensland. And this is chart on the right here. Oops, excuse me. Where am I? I'll go back and forth. Investor interest, top 15 LGAs. We break all of our investor interest down very granularly into local government areas and suburbs. Moreton Bay punching well above its weight in the Queensland. Got a couple of other satellite areas around Brisbane, so Gold Coast, Logan, Sunshine. Ipswich is down here in 14th. So a lot of the satellites around Brisbane. We've got Frankston really standing out in Victoria. One thing to note here, this is local government area level interest. There's only 7 or so suburbs in Frankston, 60, 70 suburbs in Moreton Bay. So Frankston has a huge amount of investor interest in it, Frankston itself. It is a very large suburb, so it has about 8,000 dwellings. Correct me if I'm wrong for you guys in Melbourne. Lisa's just mentioned she is in Melbourne Middle Ring. Oh no, sorry, that's where you'd like to look. Yeah, so yeah, for you guys closer by, you might know how many dwellings exactly in Frankston, but it is a very large number. So we do see that LGA usually scoring quite highly there. Look, just a little bit about our methodologies, etc., for finding growth markets. A bit of our hit rate. We did this similar thing at the end of 2014 into 2015. 9 out of 10 suburbs experienced positive growth in that 2015 period. They weren't the most common suburbs that you see that you could have sort of picked in the Sydney market and had some great returns in 2015 because they were heading towards the market's top of the cycle. These were trying to dig a little bit deeper and avoid investor momentum and actually be able to negotiate and acquire and potentially buy under market. So we had to dig a little bit deeper, and we came up with one suburb in Queensland that had a 16.4% gain that wasn't Brisbane. I think it was Noosa, not Noosaville, it was Noosa, the other one. Forgive me, it's not Noosa, it's not Noosaville, it's the Noosa Heads from memory. 17.9% gain in New South Wales, not in Sydney, it was actually in Katoomba, and 12.9% in Gunilin in ACT was a real diamond in the rough. Look, I will share the screen in a moment. If you haven't been there already, jump over to the frontierinvestor.com.au. That is our own content portal. It is all, we have 17 contributors, all very much respected people in the industry. James Smith is actually contributing content over there. All the people that I've interacted with that put the investor first have a really nice value and ethics position. I've gathered them together to provide content to the frontierinvestor.com.au. And we've got a case study on there about a Ripe House investor called Guy Williams, who's had an amazing story. He's bought 10 properties in the last 10 months, or the first 10 months. It's probably about 13 months since he's been a member now. But in the first 10 months, he actually bought 10 properties with Ripe House using our research platform. Did it all himself. Average per annum return on those 10 investments was 25%. So it wasn't a fluke. 25% average across all of those 10. 6.25% average yield. Phenomenal. All of the details of the properties, how he did it, he's gone into 3 or 4 blog posts now there around how he structures his portfolio, managing the portfolio, finance, etc. Great post there from Corey Batt as well around how to structure finance and plan for your portfolio to scale. Dave Ward, amongst others, in terms of acquisition, how you can look at macroeconomic factors, how you can structure your strategies and finance to really get your portfolio. Dave's another person with a very large portfolio who uses Ripe House and a wealth of knowledge in terms of being able to acquire and then manage and then scale up. So some really nice success that a lot of Ripe House users have been having. Just skip through these quite quickly. Susan's just got a question there around why I can't see full screen. Susan, right at the start of the webcast, I did share a link. I'll try and share it again with you, which can take you over to the YouTube page, which you can then share that as any other YouTube video as full screen, or you can, there is if you won't have the chat functionality over there, but you might be able to get a larger screen pixelation for you. Our Pinpoint Predictions report, the June edition, we have bumped Moreton Bay off our #1 spot. The short answer for doing that, we've still got a huge amount of investor focus, really nice growth stories and excellent market fundamentals in a lot of suburbs through Moreton Bay, and we think it's a great 1 to 3 to 5 year growth proposition. There's a lot of heat and a lot of investors, and now we're seeing a groundswell of investors outside of the Ripe House platform coming in and making acquisition difficult. We saw this in Logan about 12 months ago. Ripe House users were able to still get in there, actually acquire property, negotiate, potentially start negotiations 15% under asking and land 5% under asking, get some good deals. Then some large and probably lazy investors came through with bulk research and media sentiment and larger buying groups, etc. Came through and took all stock out of the market indiscriminately, put a huge amount of pressure on being able to find good properties and really change the demand-supply dynamic. And it took quite a while to settle out. We're starting to see a lot of investor interest and momentum coming into Moreton, and these are the people that you want to beat into the market to then ride their wave of growth. So their demand is causing your growth. So we're just seeing a little bit of acquisition issues in a couple of suburbs in Moreton. It's still right up there in our top suburbs, and it's now getting a little bit more strategic. The suburbs that we've been talking about, the Moreton Bays, the Caboolture Souths, the Cabooltures, that we've been talking about since Christmas time, very focused. We were really ahead of the curve there in Moreton Bay since Christmas time. They've just got a huge amount of heat in there now. You're coming up against multiple offers. So we're seeing a new LGA. Gold Coast has come in. It's been right there in the wings. We've still got some really nice acquisition opportunities through some key Gold Coast suburbs. That has already seen a lot of investor interest, so that's changed as well. The Coomer's has dropped off. The Nerang's dropped off in terms of heat. Hobart is sustaining and building really nicely. This very specific slice of Hobart to focus on, a small number of suburbs. It's not you don't just throw a dart and invest in Hobart. It's a very specific reason and growth story down here. I'm in Tassie, by the way. Sunshine Coast is another one that's featured in there, but we've got 11 council areas, 22 suburbs, heavily analysed. It's 90 pages of research in this June edition of the report. Sorry, I've just skipped ahead once again. I do apologise. Look, what we're talking about is targeting a growth market. So we're looking towards an LGA, and it may have new infrastructure in the case of Moreton Bay, new university, new marina, new business park, etc. All of these things are attracting new people to the market. That groundswell momentum is potentially going to result in above average short to medium term growth. This is the outperformance, the green patch here. That's what we want to make our profit. Instead of just settling for the normal property cycle, the normal growth, let's get this right and get this above average return in the short term. And then that's, prices will increase, and that will be all priced into all the excellent things that are in this LGA now that previously weren't. Population increases might slow down, employment opportunities, etc. That's just going to fall back into the mean. So Moreton Bay might fall back into the Brisbane or Southeast Queensland cycle. Once everything's good's happened there, that might fall back into the macro cycle, the Australia-wide cycle. So we're really trying to look at 1 to 3 years of outperformance. So like Guy has done, he finds these markets that are ready to move from day one and deliver that growth up front. That's what we're really trying to do. Just a little bit, I won't go into this in too much detail. What we're trying to find is income, employment, population pressure, increasing net demand, looking at where that demand is spread across. When that demand starts really taking traction into the suburb, it attracts investors, a larger buying pool. They're usually indiscriminate, and if they don't get it right, they might just wholeheartedly just buy anything, and whether it's unrenovated and renovated, 3-bedroom, 4-bedroom, 2-bedroom houses, whatever it is, they just want to get into that market. When you start seeing that occurring, the price differential closes between new and old. That's when you're starting to see a huge amount of investor heat and momentum. That's probably the time to start looking elsewhere. You've probably missed your optimum buying window. We're all about potentially finding these areas as the heat is gaining and using that heat to give us the growth. So there are some really nice strategies to use around when the price differential is closed, looking towards newer type properties and manufacturing equity there. It's all about, this is the absolute key, focusing on the in-demand property type at the time when you're looking at this market. Where is that demand being focused towards? Are new residents towards Moreton Bay, which they are at the moment, a huge bias towards 4 bedrooms, 2 cars, 2 baths. It's non-negotiable. That's what they want. You've got 2 people, mum and dad have both got jobs. They are moving towards the area for business opportunities in the business park that's 20,000 people. Caterpillar is the first tenant. A lot of industrial employment, trading employment, a lot of commuters to Brisbane. They want new type houses, 5 years, 8 years max, 4 bedrooms, 2 cars, 2 baths. To quote a local real estate agent, they want to be able to park their jet skis in the garage off the road, is how they describe it. So it's about matching the type of property you're targeting to the demand and who is moving into that area, and that is going to deliver us the best returns in the short term right off the bat. Okay, what this is all about, I'm going to introduce a concept to you in a moment, which is around not just settling for targeting a street. It's around a Ripe House sweet spot, which is the perfect streets in the suburb to help us amplify our growth. And if you get this right, our research has gone back and it's done 5 years worth of retrospective analysis. If you get this right and you invest in a Ripe House sweet spot, you can expect 21.9% above and beyond growth. So capital growth in relative terms, if the suburb overall grew 3%, you would expect 4% by investing in the sweet spot in the area. That's around 10 to 15% of each suburb. And over 10 years in the Sydney market, you would expect above and beyond $24,000 in extra growth if you get that street level right. So the way that I always try and get people to think about it, you know the suburb that you live in and grew up in, the areas that were great and really going ahead, and the dead spots. You want to make sure you're focusing on those thriving streets that tenants are demanding and driving rents up. Yields are very strong, and that's where people are looking to invest and live and grow and thrive. That's what we want to focus on. We want a methodology to be able to seek these areas out anywhere. Some other things that are really important. So we've got an amazing database here at Ripe House, which is the keys are thrown to you around property and location. So we've done a lot of research. It comes down to the big 3: transport, shopping, and schools. 250 metres to the closest school is optimum. Shopping out to 1,200 metres, transport about 1 kilometre, or right on the doorstep of transport, buses and trains. This is we did it for cafes, restaurants, parks, hospitals, doctors. Didn't really touch on and affect appraised value or growth. These were the big 3. The other thing that we did in our research, which we constantly do, is how does public housing affect value and growth potential? You can see the exact public housing concentration for every street in the country using Ripe House as an example. Expect to pay 25% more than the suburb average if there's 0% public housing in the street, and 18% or more public housing, expect to pay 20% less than the suburb average. This is what a little bit more clarification. Keep the questions coming in, guys. I'm going to bring them all together at the end, and we can get to them one-on-one. Or one at a time. But if there's anything relevant at the time, I'll jump in and really answer it. So keep them coming through. Yeah, I've got a lot of questions already from you guys, so feel free to keep them tuning through. What we were talking about before with this sweet spot, when we need to get this right, these are the 5 critical elements that we have found affect growth. So not necessarily value, but growth, because this comes back to where people are demanding to live in these suburbs now, and this is the groundswell of momentum. So we look for streets with low public housing, lots of the in-demand property type, higher than average rent, higher than average yield, and good, strong tenant demand. That's a really unique combination. When we find it, it's absolute gold for growth. Okay, I might leave that there. There's been a lot of deep statistics, and your brain is probably hurting. Look, the Ripe House platform is about making all of this simple for you. It's about helping you make clear and confident decisions, not to confuse you. The software is really designed to make it easy to use and get this information and get you a short list of properties to make actionable decisions on. So yeah, if all that sort of hurt your head and got you thinking, just think about what it's worth to you to be able to find these suburbs and these streets and make that decision-making process clear and concise. And have the resilience and knowledge within yourself that you're ahead of the curve and you're leading that wave, and you are not behind it, you're not with the masses, you're able to jump in front of it and get some awesome results. So just have a think about how much that might be worth to you, and the types of tools that might be available to do that. Okay, I'm just going to pop things there. Let me know, keep the questions coming through. I'll put pause on while I change the screens, change over tabs. Yeah, what I'm going to do in a moment is, get the chat and then typing ready, because I'm going to display a page which is our best bits for June, our absolute growth markets for June. This is behind the magic curtain, so to speak. It's not usually seen, so I'm going to use it as a way to you jump in. Let us know what suburbs you'd like us to focus in tonight on. This is the choose your own adventure part of this evening. But it has to be quick. I'm going to really try and quickly see patterns. I want to hear from you. Yeah, so I'm just sort of priming and getting people ready for that. I won't be a moment. Okay, what you can see here, let us know if it hasn't switched over properly, is the Ripe House dashboard. Okay, so look out for this space. We've actually got another rollout of this coming out in the next couple of weeks. We're always trying to engage with our Ripe House community and improve things. Just a lot of feedback we've been getting about how we can actually improve this. We are rolling that out in the next couple of weeks, so a lot of changes there to really simplify things for you. But this is the main dashboard where you can do a lot of your research, kick it off from. All of your account admin and our learning modules, etc., are within here. These links over on the right-hand side of the page are the real keys. You've got 5 layers. So what we talk about here at Ripe House is a holistic view to property research, making sure each layer of I'll show this graphic here, each layer of our research at the state, the council, the suburb, the street, and the property is comprehensive, and it's all in context. Okay, so if you think about it as a big funnel, there's no point purchasing in a council that is great for yields if you've got a capital growth strategy, and the suburb that you choose is great for renovation. Okay, you need to get it in alignment. And I'm not trying to get things too complex here, because I'll show you in a moment how it can be simplified, but it's all about making sure that we're investing in a state, an LGA, suburb, a street, and a property, and it's all cohesive. We're amplifying our results at every stage, and that's what it's all about. Look out, we've got a blog post I did myself on the Frontier Investor in the last week or so, called "A Holistic Approach to Property Investment," and I do have an ebook. So everyone that's on the line tonight, shout out, reply to email jacob.field@ripehouse.com.au and say yes, please. I'll send you through first look ebook around the top 5 investment strategies and which one is right for you. And this is all about finding your sweet spot, what you're trying to achieve, and give you a scorecard to assess opportunities and suburbs and local government areas that are going to be appropriate. So shout out there, and I'll get that through to you. Lots of really awesome content that's coming through the pipeline the next couple of weeks. We've been really hard at work here. We've scaled up really quickly internally, and lots of great stuff coming through. So that's just the tip of the iceberg. I just wanted to clarify that there, because we've designed all of our software research in each of those 5 stages. Got a lot of Rakesh, Pin's looking at orange. Janos is Faulkner. Thanks, Joe, for letting us know. I can jacob.field@ripehouse.com.au. Yvette, hi. Patrick, yes, please. Yep, keep them coming through. I'll get that first look. It will be available to the public in the next week or so. I'll get that through to you straight away with the ebook. Look, what we've got here, so this is the first layer of our research, a lot of familiar names, so do bear with me. This is giving us a bit of context around which state is primed for growth in terms of a property clock, recent growth, and then the individual numbers that go into our property clock algorithm. So this is not based on anybody else's property clock, other research companies, etc. This is all of our own data set and our unique algorithms to assess property clock information. We don't just do property clocks for state or city. It goes down to local government area, which is actually the only layer of this whole layer of a holistic approach to research that is actually worth something. It's at this point, it's any information that we see at a state level is far too generalised. You've got so many ups and downs happening in the state at any one time, so many markets, that anything you see around a state or a city, any recommendation at a city level is still too general. It's really not worth the paper that it's written on. We need to get down to actionable advice, and that's when the local government area really kicks in. Okay, so at this point, we can really only see a general pattern. It's not really meaning much. Queensland, South Australia, Tasmania, Victoria, even New South Wales, it's coming towards the top of the cycle as a state. Sydney's probably already in the slowdown phase, but as a state, it's coming up towards the top. You can see how generalisations really can harm us and not do us good. When we go down to the next level of our research, sorry, I'm skipping through. Sorry, I'll click on a state. Let's focus on Queensland as a starting point. Let's go into each LGA in the state of Queensland, so you can see them all there. What you can actually do is then filter and see individual local government areas and where they are on the property clock. Okay, so this is where it actually starts meaning something to us. I'm going to go across the whole country right now. I'm going to do some filtering. I'm going to look between, I want to find LGAs that are between 8 and say 11 o'clock on the property clock. Yeah, usually here 8 to 10 o'clock is my sweet spot, where you've got a lot of demonstrations of market recovery and pending growth, but you haven't topped out yet. So you've still got some nice growth to occur. So I've filtered. You can see our list of LGAs is a lot shorter. You can see a lot of 10s and 11s over here on the property clock time. I might put a maximum days on market of 120. I don't want to be investing in somewhere that has a very slow turnover, and if we needed to get out of the market, that would be very slow. 120, potentially even 90, these arguments for in terms of our maximum days on market in the local government area. Now, this is a unique score over here at Ripe House. We conducted 150 interviews in 2015 and the beginning of 2016 with localised experts, so buyers agents, valuers, researchers, real estate institute members, and local agents in areas, and we normalised that. So we collated it all together. We compared them apples with apples, and now we have an updating that research with sentiment analysis across media and any mentions of these suburbs, positive or negative. And now we collate an opinion score. So this opinion score is really powerful in terms of the higher the score, the more positive sentiment there is about a local government area. Now, there's a big caveat on that, because the more positive the sentiment, the word is already out. Okay, so this is generally correlated and related to the higher the opinion score, the more investor interest, the more momentum in that market, and we may have already missed our boat. So I like to see good, strong opinion, but also lower to medium investor interest, and we can at least assess markets and get in there. So see a lot of City of Brisbane. It's a very vast LGA with 300, huge amount of dwellings, 380,000. A lot of opinion and sentiment obviously associated with that, because it is such a large LGA. Logan is scoring very highly on the opinion, and it's low on the market health. So the market health ticks and crosses. That's our on-the-ground assessment of growth upside. Have we already missed that buying opportunity? Is things starting to go in the wrong direction? And this is sort of starting to give a sign. So opinion is great. We've got really positive sentiment, etc. That's the media. That's the big buying pools. It's already 11 o'clock on the property clock, and the ticks are coming down. So we've only got 2 out of 6 ticks. So, that all signs there are showing that it is potentially just crossing over onto the dark side and into the slowdown phase. Still great buying opportunities, and you still might be getting good growth over the next 3 years. I'm not saying that. It's more that your window of opportunity to purchase is probably closed, and it's now more difficult to negotiate and acquire. Okay, so Moreton Bay is sort of heading in that same direction, a little about 6 months behind. We've got Gold Coast. So this is an interesting story, and I'm going to go into the next page now to talk around how we can actually cut through this and get down to individual suburbs in these LGAs that are still presenting very nice opportunities. So Logan is one where a year ago we're looking at the Kingstons, Logan Centrals, even down to Logan Lees. Now there's a different mix of suburbs that have held the test and are holding up really nicely and have intrinsic drivers that are demonstrating and holding these markets up, and how we can really cut through. And those suburbs are completely changing month to month. How we can really buy those optimum suburbs. Ruby's just asking that question: which Logan City Council suburbs are worth investing in? Look, we've got a lot of. This is our absolute list at the moment. This is what we derive and bring in and into our predictions report. Let's click on Logan, because this is all about now. We've got our confidence in the LGAs, which suburbs in these LGAs, and it's all about not leaving you asking any questions at all. So we've developed a unique visualization mechanism to compare suburbs in each of these LGAs, like for like, and give you the top candidates right off the bat. Okay. So this visualization is called a radar chart. The bigger, the greener, the better. In terms of the metrics, the higher the metric health, the better the on-the-ground dynamics are for buying and for immediate growth. So these are the suburbs that are most likely to have the short-term growth. Opinion is that sentiment score. So you might want to wait for the crowds to arrive, or you want to try and beat it a little bit, or you want to wait for a reliable amount of interest to know that things are, you've got that groundswell of positive sentiment, etc., and that's enough to be a big go. Or you might be the type of person that wants to look at the Logan Central, where opinion is a lot lower, and that might mean that it's building, or it might mean it's contracting, and in this case it's contracted from a high point. So Logan Central is on the way out in terms of the sentiment, and people have moved away from it. We've also got a unique metric. So this is the investor interest metric. We like to see good, strong investor interest, but if it's very high, which you'll see in a moment around the Moreton Bays, it means you're fighting over a lot of other investors in that market. It's a really nice finger on the pulse there. Investability. So this is telling us, are there properties that are currently in demand for sale in the Ripe House Sweet Spot streets? So can we actually acquire properties using this platform, using all of the, giving us all the ticks in the boxes at the street and the property level? Can we actually acquire properties there? So we like to see good, strong investability. And income. Income strong and stable. High yields, good low vacancy rates. It's a derivative of those things. So we're seeing a full picture of the suburb. I hope that answers your question, Ruby. Just as a bit of a commentary, Waterford is holding up really nicely. It's in our report. We've got some detailed, deeper dive information around exactly which streets and why in Waterford. Marsden is one that we spoke of last year at Logan Central. For various reasons, they have all come off the peak. You've got the Eagleby's, really low metric health there. It's really low on the ground assessments of market health, etc. But that's talked about, and a lot of investor interest in Eagleby. So you've definitely, in terms of the data and our recognition of that, missed that buying opportunity. The Woodbridges, really low, tremendously low metric health and low investability. So you can see the different shapes. Not all suburbs are so big and green. You've got lots in Logan even that are just complete basket cases, to be blunt, and really to avoid. So this is a really powerful thing. And look, you can actually click on the metrics part of the chart. That will load up our 6 health checks for a market. So are yields nice and high? Are they trending upwards? Sales volumes nice and high? Are they trending upwards? Days on market accessible, even decreasing. And you can actually see under the hood. So I clicked on the wrong button. You can see under the hood at all of our data. You can see in front of you. For those who love the data, love the numbers, you can actually do all of your research, and you can see how we come to our conclusions. That might take a few seconds to load because I'm sharing the connection. You can see how we base and all the mechanisms for it, and you can actually do some really nice analysis within here. So you can see that the for sale trend line is going upwards for Eagleby. You can see for sale prices, a 90-day rolling number. You can see every single for sale incident in Eagleby for the last 4 years, 5 years, when it goes back that far. Look, so you can see all that data. That's everything that we have access to. We contain all and own all of our own data sets. What we look at, this is from today. It's not from last week. It's not from last year. We act and make all of our decisions. Whenever you see the live heartbeat within Ripe House, it means that this is live data as of now. So we're doing back checking. Where all of our generation, etc., is done every single day. You can see exactly what yields are doing as up to today, for sale price in terms of per quarter, sales volumes, days on market. You can have a play around with it to your heart's content. So it's really quite powerful there. Look, if you don't really want to go into that, you can just trust the radar shapes. What I'm going to show you now is where I'd like to really lead this evening. So I don't know if you'd like to go into Logan itself, into Moreton Bay, into any other LGA across the country. But this big green, this is our mechanism. The bigger the greener. This is where we base a lot of our research in the report, etc., on these suburbs. These are our absolute top picks in the country. This is always changing. You know, whether you want to invest now or in 4 weeks, it's going to be a different set of suburbs. And these are the suburbs that potentially have the optimum buying window open right now. In some of these suburbs, you've got investability decreasing, so those in-demand property types are just selling, and they're not being resupplied into the market. So acquisition might be a little bit tough. Moreton Bay, Morayfield and Caboolture South and Griffin's closing up now. We're up here even up to 4-6 weeks ago. Now they're right down the list and even dropped out of our big greens. There's usually around 130 of them at any one time. If you see any names jumping out that you'd like to, so Tim's voted one for Moreton Bay. You'd like more information about, do shout out. We've still got Narangba, Griffin, Bray Park, so a lot of heavy hitters in Moreton Bay, Burpengary. The Gold Coast will coming through, Ormeo, Oxenford. We've got some few through the city of Brisbane. Sunshine Coast is looking really strong and a lovely growth story up there in a lot of suburbs. Not very So yeah, this is a really nice example. Sunshine Coast, outstanding metric health, really strong opinion. So the locals on the ground, experts like what they're seeing. Really strong income, excellent investability, but investor interest is low. This is a shape that I really love to see, and these types of suburbs really stand out for me. Warana's one near the local, the hospital extension up there, which is demonstrating, you know, it's quite accessible in terms of price, close to the water, right next to the hospital up there. Look, Renee's just mentioned Woy Woy, Sharon, Holmesview, Elisa, Strathpine. I wanted to try and stick it to these big green suburbs. I can do that one-on-one with you at the end. If you're like jumping out to an LGA, we've got the city of Hobart here, Glenorchy, Moona, Gold Coast again, Tweed Heads. We've got the city of Dubbo. Any jumping out, we've got a few through Campbelltown. So a couple of suburbs in Sydney holding up. We do have Woy Woy. Who mentioned that? Renee. We might be able to jump in there now. Let's do that. We can jump into Kings Beach, Joe. Jump in and pop me through an email and we can organise a time to catch up. I know we've had back and forth troubles. Let's have a look at Ipswich too. Quite a few coming through for Moreton Bay. So why don't I go into Woy Woy now quickly. We're going to Kings Beach, Caloundra, looking particularly at units, which is what you'd be wanting to stick to there. In the Sunshine Coast, we'll go into Ipswich and see how we're going for time there. So we'll run Helen there while having a look around the Sunshine Coast. So Woy Woy is one of those suburbs where it really is only Woy Woy in this LGA that stands out. So once Woy Woy and whatever's happening there in terms of demand and supply is tapped out and tops out, it will then fall back to the local government area overall. Woy Woy is one of those exceptions, not the rule. So I like to probably latch on to a suburb that is demonstrating excellent suburb level metrics, and then also the LGA is as well. So you can remember that chart when things top out. If things top out, you can fall back onto the LGA growth. Woy Woy, what it's all about now is helping us to find the in-demand property type and the streets that are most the Ripe House sweet spot streets, if you remember back to those. There's a huge amount of research and detail on this page you can really sink your teeth into. Jump in by all means and have an experiment. I won't go into it tonight because we could spend an hour. You can see all the properties on the market, the listing history, if any of them have been discounted, when days on market. You can see for sale and for rent properties, sold properties as icons. Huge amount of sold properties you can see for rent properties. Yeah, a lot of suburb level metrics over on the right hand side. You can see exactly where public housing is in the suburbs. So 42% public housing in this south west area of Woy Woy. That's where you come down off the hill there from memory. Quite a lot of nice houses there along the water, but It's a little bit of a creek, sort of nice sort of bush sort of setting along that Woy Woy Road there from memory. 42% public housing, so you need to know that information. It's absolutely critical. You can see exactly where the higher yields are. So interestingly enough, quite high yields in that public housing area, probably because the price points are quite low in terms of price. Really high, you can see exactly where the higher rents are, exactly where the yellow areas where tenants are demanding, the green are owner occupiers over here towards the hospital. You can see where people are demanding units versus houses in the green. Huge amount of detail and analysis you can do there per street. Let's just find where the streets are in Woy Woy to look at. This is basically going to pre-populate our default sweet spot structure. So this is going to, this page will allow you to target those streets that satisfy our 5 requirements, and it will automatically set those tolerances for you. If you can remember back, you can actually jump in here and override them at any time. It will show you the exact streets in the suburb to invest in. There's 4 of them in a line. This is a really positive sign and a very strong sign that people invest and demand to live in this pocket of Woy Woy for the same reasons. A very strong sign there that this is potentially the spot for amplified growth. You can actually filter properties that are most in demand. 3 or 4 bedroom houses from memory, it told us was the most in demand property type. I'll show you where that comes from in a moment. Let's see if there's any actual 3 or 4 better houses for sale in these streets at the moment. I've just flicked through that really quickly there, guys. It's taking a few seconds to apply this because it's got a lot of calculations it needs to do. And my connection is down here in Tassie, which is not the best at the moment, to be honest. And I'm doing the webcast as well. So while that's probably just thinking, I've got Warana. So I was jumping into King's Beach. Joe's just mentioned she is popping offline, so I'll pop through. I might take that one-on-one. We can have a look in there quickly in Warana and then into Ipswich while that's still loading. I'm just going to run up to the top. So Warana, yes, please. Was one of the comments there. Okay, so Warana is actually one of these interesting ones. It's quite an accessible price point. I think it's about $450 from memory. That'll load up in a moment. It's telling us that 3 bedroom houses are most common and in demand. We can see where potentially public housing is. So we've got some dark patches of public housing through here. Even though it is dark, it's still relatively low in terms of public housing, only around that 6 or 7%. So public housing, not really an issue at all. It's generally around 15% public housing that I start to be concerned a little bit. We can see in the yellow areas here with good, strong tenant demand. So tenants preferring these yellow areas. That's actually down towards the hospital and sports stadium from memory. Owner-occupier preference towards the beach, which is not surprising. Yield, so stronger yields down here in the south part of Warana. And we've got some individual sweet spots. Let's have a look where those are. Okay, so it's literally draw a line in Warana. South is where we'll focus on per street, and the north potentially not so. So I won't do the filtering there in terms of property. Okay, we can go down into that a bit more detail. I'm going to try and skip through things a little bit quicker. What we've done here in Woy Woy, I'm just going back and forth. I've got please grab me and slow me down if things are a little bit confusing. I had this search going in the background when I had Woy Woy open. It's now found us 4 3-bedroom houses for sale in our Ripe House Sweet Spot Street. So these are the properties that are really the highest chance of leading growth forward and amplifying growth for us. We can see that one of them's been on the market here for 16 days. It's on the market for $560. We can click on that property. It'll go and drag on any image that it can see. Quite tidy, but potentially unrenovated. Oh no, sorry, looks actually renovated. Just that orange put me off. Quite tidy, well presented, 750 square meters. I would gauge that as good condition. Our automated algorithm has assessed this property using advanced or relatively advanced algorithms in terms of we have artificial intelligence on the top of you guys overriding properties, and it learns from how you assess properties, and it has a go at it itself. So it's actually 80% certain this property is in good condition. It was listed to firstly on the 31st of May. Now, it was originally not listed, so it may have been going to auction. That was then taken off auction and pushed to 560 as an asking price. You can see suburb area level information. Then you can go away and it will find the 5 most valid comparables based on condition, the location, the property type, etc., and bring it together. So we can do a full market appraisal there. Okay, what it's done, so Scott's mentioned this might be of benefit to everyone else. Scott's mentioned that Warana has developers buying up every old house currently that can become a duplex. So a lot of artificial or genuine demand for larger blocks. Not sure if you know, Scott, the minimum block size for those developments into duplexes. Would this property at 753 work? It is in the Ripe House sweet spot. Sorry, this is in Woy Woy. What am I doing? I'm doing too many things at once. That might be worth, yeah, jumping back into Warana and we can dissect it a little bit. Not sure if that's the case down here in Woy Woy. What this is going to do, it's going to pull in the 5 most relevant comparables. If you disagree with a comparable, you can take it out. It's going to average the top 5 comparables that we find. It's worth owning this process. So an automated appraisal can sometimes throw us way off the scent. It's really worth taking the time to understand comparables and get them right. This software really allows that to be an easy process for you to do. Jump in. It'll take those 5 comparables. It will run them through the streets that the property is located on, and it will negatively or positively weight that adjustment, that assessment, that appraisal based on those charts that you can remember seeing. So this one, a little bit of a penalty for being too far away from schools and transport. Good, slightly positive weighting based on public housing adjustment. Final appraisal is coming in under asking price here. Maybe some wiggle room, maybe not, yeah, needs to come down a little bit further. You can use a lot of things like public housing data and days on market to really negotiate. Yeah, in this case, it potentially is worth going in and looking at those comparables a little bit closer because we've got a little bit of gap there. It's worth really owning that process. So hope that answered a few questions around Woy Woy. Maybe frantically writing down all those street names. Got a lot of questions. Janos is just asking which. So we go out as Google search engine. We go across and gather towards search listings every day and bring them all together from across the internet. In the same way that Google does. So we don't, we provide that as a search result, and you have to go through to the original source to get the further details. Yeah, across all the major sources of that of online listings. Janos. Okay, Scott, why don't I get rid of the second property there without an image? Sometimes in a case of the sold property, they've taken all images off the internet. There's no more traces of images, or it never was supplied with one and it's become a sold listing for us. It doesn't come with images. Sometimes I just took a couple of, it was, to be honest, random then when I removed those properties from the list, just because they did jump out at me quite substantially more expensive compared to the other properties in the mix. So there was 3 or 4 of them there at around 450, 2 at 680, 625. They're the edge cases and potentially not really beneficial for helping us to value this property in question. So I did remove those to try and get them a little bit closer. Haley's just asked, how do we work out crime statistics for each LGA? Down here in Tassie, as an example, we had to go to academic sources. So down here to the uni, look through papers, etc. New South Wales, as an example, very accessible. So that information is very available. We had to normalise that and bring it all together so we can generate crime statistics. We look at crimes to person or property. So house, property, cars, or person. So not fraud and white-collar crimes, etc. And we had to normalise that to get that crime. So Rachel just asked, can we find sweet spots for off-market property? I might demonstrate that. We'll go into, we've got a lot of requests for Moreton Bay, one there for Deception Bay. So Deception Bay itself is not actually scoring for our big green assessment at the moment. Bray Park is actually described in our, is actually contained in our June report for the first time. Right near the new university, Deception Bay is up closer to the water. A lot of people get attracted to Deception Bay because the price point is low, yields are great. There's a lot of public housing in Deception Bay, so you've got a lot of people moving towards Moreton Bay for employment. Got jobs, and public housing can compromise that demand. So 50% public housing in some streets in Deception Bay. It's a real catch. Look, we've actually got a webinar that's available for private users of Ripe House with a local area expert, Dave Ward, who is a Frontier Investor contributor. He's got an incredible amount of knowledge for Ripe House users. They can access that webcast recording. It was 2 hours of in-depth suburb street by street research and detail within the Moreton Bay area. So we talk around Deception Bay quite a lot in that webcast. So for those members who haven't seen that, reach out and I'll send you through the link to it. Bray Park is another one. It was right up there in our big greens. It might be more relevant. Deception Bay sort of fallen off in terms of our on the ground market assessment. So Bray Park is one that's on the up and still got some great investability. So we can still get in there and buy properties in the Ripe House sweet spot street. So let's find where they are. Lots of properties, as you can see, on the market. Great investability. A lot of the properties currently on the market are in these key streets, which is a really good sign. And you can filter them quite quickly and see. So this is probably something different. Bray Park will probably be the suburb that I'll be starting to look towards. One that you probably haven't seen mentioned in other places. You can quickly get down to one property's been on the market for 230 days. So if you're thinking back to Woy Woy as an example, the properties that are in demand and in the Ripe House sweet spot streets, they're all just onto the market. Where in this case, even in Moreton Bay, you've got a property that's most in demand, 3-bedroom, 1-bath, in the Ripe House sweet spot streets that has been discounted already and been on the market for 230 days. So these opportunities don't really exist in the really strong heated markets. This is how your Ripe House is sort of right on that cusp of helping you target these ones. Okay. I might. So I'm just aware of time. I do try and wrap things up at 9. Why don't I put things on pause there, and I'll jump back in the slides and all of these questions that are waiting here, and so bring more. Any more that comes through, I'll grab them all together and we'll do an extended Q&A in a moment. But I'll just change back. Let me know when you can see the slides again, if you can. Yep, so that's wonderful. That's come through. So we can get some. I've got a lot more questions to get through. It's really been overwhelming with a number of conversations, etc. So we'll try and work through these methodically with a Q&A session at the end. Okay, so that was our bit of a deep dive. Not really anyone asking questions around Hobart. I have been seeing that from in the media, etc. It really is only a small number of suburbs, as I said, down here, which are contained in the report, and these are all around the main commuter hub, the Brooker Highway. In Moona, gentrification happening there, Glenorchy and Claremont, so the key growth markets at the moment. There's some really nice growth stories in closer to the CBD, which are outstanding market dynamics at the moment, but just way too much market heat. Days on market very low, etc. Incredibly low vacancy rates down here in Hobart, under 1%. It's really tight market at the moment, and great growth conditions. Look, I just wanted to talk quickly for a few moments. Ripe House is a tool that's used by other investors like you in the industry, buyers, agents, educators, and researchers. So this is just a little bit about what they've had to say about using the software. Just wanted to go through a couple of examples. So Ross actually bought in Caboolture South in January. He purchased, and he was beating that heat into that market, and we were able to negotiate on that property quite strongly, using the platform down to 310,000 estimated. So it was yielding 5.7% straight off the bat, and estimated value for this property is around 340,000 now. So this is just another example. So that Guy Williams type property where you're getting that growth, that 10% growth right off the bat, because you're buying at that optimum window, that optimum buying opportunity. Basanth was someone who's used our platform, still using our platform, but not in Logan from memory. Basanth, if you're on the line, shout out where you are investing at the moment. Bought a couple of properties in Logan right when that was the demand and the larger buying groups were just about to come through. So he benefited from $15,000 growth right up front by getting in there. Guy, so this is one of Guy's purchases. He just purchased this in March in Moreton in Caboolture from memory. Great growth, $10,000 estimated within the first month or so. So this was actually put together in April. So right off the bat, more details on that property in the Frontier Investor article. Then, Lorraine has actually invested down in Wyong. So I'll have to touch base with Lorraine around how she's gone with this renovation, because she has got a flipping strategy and uses the Ripe House platform for Renovate for Profit. Look, I just wanted to mention, so Ripe House subscription is usually $997 per year, and everything you've seen tonight is available to you as part of that subscription. There's no restrictions, etc. We've got a great raft of research, private research, members-only content, and webcast events where you can ask us and do individual case studies. It's all included as part of the subscription. It's usually available for $997 per year. It's the only way to actually access our tools and research. Tonight only, as a massive thank you for sticking around and getting involved and all of the questions, I'm so pleased to have be able to field them. I'd love to offer a $200 discount to you only tonight until 11 p.m, bringing the price down to $797. Ripe House is all about helping investors. So I'm an investor. We can answer and help you with any investment questions internally as experienced investors. It's all about helping you. So in terms of packaging up something that you can really get into and move on tonight, I'd love to include monthly coaching events where you can jump on and we can work through in a group session online what you're looking at, where you're looking at, what you're investing in. Is it going to be working for you or not? We're going to have our next 3 pinpoint predictions reports. So the one that we've just released, June, July, August, provided at no cost to you, usually $97 each. So you can really get moving in your research, and then full access to all of our resources. So $935 of extra added value that I'd love to include as a special bonus to you tonight. Look, www.ripehouse.com.au/bonus. I really hope that is going as far as I can to show that we're all about trying to help you as a community of investors to really thrive and get results together. You can lock that in, www.ripehouse.com.au/bonus. And just to bring everyone together so we can really start moving straight away, it's going to cut off at 11 o'clock tonight. Look, this is probably coming up to that time of the year before we get into the Q&A session. It's tax time coming up. If you've got investments or property investment income, you can potentially, so subject to your own specifics and your own circumstance, use the Ripe House subscription as a tax deduction, as an educational expense claimed against your investment property income. That's a big catch there and makes things a lot more accessible coming into that time of the year. Just letting you know that URL, so we do have live chat, phone and email support based here in Australia. Our payment is processed by Stripe, which is best practice between you and Stripe. That's the only time that your details are then contained. We don't hold them for security purposes. Best practice in terms of processing your payment. So once again, www.ripehouse.com.au/bonus to lock in that thank you gift. Okay. Yeah, this is probably just going over it again, but this is the graphic that you're looking for on that bonus page. And right at the top of the page there, you can click on the Get Started button, which will then take you in. It pre-fills in a coupon code. So all you need to do is enter in your basic details, then your credit, then it pre-fills that coupon code. So make sure that's applied to bring that down to $797 for you. Then click on the Purchase Subscribe button there. That will then allow you to enter in your credit card details. Then you can actually click on Subscribe. It will create your account and you'll receive your login details, and then we're on hand to support and chat and help in any way. So I'll just pop things on pause for a moment, on mute. If you've got any questions, jacob.field@ripehouse.com.au. I'll be back in a few moments to answer the questions that have come through and collate them all together. Look, if you don't want to stick around and I've answered everything, there will be a recording coming through for this tomorrow. which you can jump in and see and hear everything again. If you don't want to stick around for the Q&A, thank you so much for attending. I really hope you've got something out of this evening, and I'll be back in a few moments for those that do stick around. Okay, thanks for everyone for sticking around. There's a lot of individual individual requests, etc. It might be worth just taking those offline, and I can do those one-on-one. I'm just trying to get some value for the group and everyone on the call. Still a lot of you that are stuck around, so I'll sort of talk around sort of the more generic and bulk questions, jump everything through to email for follow-ups, etc. So Lisa's just asked any recommendations for Melbourne, which seems to be in a good position on the property clock. So I'll just talk quite generally, Lisa. What we are seeing with a lot of markets in Melbourne, probably towards the slowdown phase already. So you've had some good growth there, quite patchy. So middle to upper market has slowed down considerably. We are seeing 450,000 and below as still great. So really good on the property clock, really good market health using all of our LGA and suburb level tools. So we're talking more the satellite areas, particularly sort of down towards the Frankston southeast. Really strong, nice growth stories over in Geelong. Very bullish on the Geelong area in particular. Things to watch out for in the northern area, you've got a lot of supply that can come into the market. It's just going to keep coming in there. So even though it's a low price point, you've got really good demand-supply scenarios at the moment. You've got some supply-side risk. So, Lisa, under 450 in Melbourne. Look, as they're coming through, I'm going to work down them once they slow down. James has just asked around Richmond, New South Wales. Not jumping out at me at all as such, James, but we are seeing, so if you can think back to the big greens, it was Parramatta and just south of Parramatta CBD is probably the shining lights in Sydney at the moment. Especially Western Sydney, and then out in and around the Penrith area, Badgerys Creek, still doing reasonable things in terms of demand supply, not specifically Richmond from what I've seen. It'll probably have to be a one-on-one deep dive with you, James. I'm happy to do that. Okay, Anne's just had some questions around the blurriness. There was a link that was passed out that would jump into a nice, clean and crisp version of the webcast, and there will be a recording coming out for you, Anne, as well. No worries. Yeah, there is. So Janos is just asking around monthly subscriptions. So we're all around annual subscriptions. That's the only way that you're actually able to use our platform. Just because we aren't biased, it's around helping you to research and gain confidence in actually buying. So we have had to modify and adapt the products that we can offer and how we offer them towards an annual product to support how you research and acquire. Therefore, we can only really justify offering a annual pricing model to sort of match how we have developed the product out, if that makes sense. So just to sort of probably clarify, a lot of investors sort of go, yep, I've just got my finance approved, let's go investing, I want to go and research a property. At any one time, the suburbs are changing, etc., to do that. So we sort of more typically talk around, if you're looking at investing, you've got a 6-month timeline. Let's start proving to yourself every single month with monthly calls that you can do it. So we can have an assessment. Have you been able to find a property now, even though you're potentially not going to buy it, that's going to really tick all the boxes for you? And you've done that month after month for 4 months, and now suddenly you're ready to go. So we have all of the content and support to help in that process over and over again to prove to yourself you can do it. And then when you're ready to actually go and purchase, you've got the confidence to do it, because it's all about these confidence it's all about confidence and yeah, being able to do it over and over. Okay. Rachel's just asking around fantastic content. Thank you. So much hype a while back about Brisbane, which hasn't eventuated. Do you see it kicking off anytime soon? Look, Brisbane itself, if we're talking about the local government area of Brisbane, if you can remember back, 179 suburbs. It's a very vast area. That's enough suburbs to be, you've got some suburbs doing really good things, some suburbs not doing very good things, for it to average out and to be a bit ho-hum. You've got a huge amount of supply side risk. So, just the really low level, no sophistication whatsoever investor going, let's invest in Brisbane. It's doing great things. Sydney and Melbourne have had their growth. Now it's time for Brisbane to shine. But let's go buy an off the plan apartment in northern area of Brisbane. We're seeing a huge amount of that. So when you sort of start seeing median prices in the Brisbane area, it might not be affected because it might not change. Because you've got a lot of lower cost units entering the market, holding that median price down. So you start seeing individual things like that. In terms of a Brisbane area, it's too generic. It's a too generic question. Just really particular around the Brisbane market, you've got a lot of established areas in growth corridors with good infrastructure out towards that 10K northern area, Chermsides, etc., doing really nice things. That's where the majority of strong big greens in Brisbane are located. You've got a lot of massive supply side risk. So just, you're seeing it in Melbourne, but to a lesser degree in Brisbane, but a very high risk. Apartments going up left, right and centre. So you can't control supply coming into the market. Therefore, you potentially can't control your growth. I'll just keep trying to move along. Rakesh, can you just remind me which LGA Karana is, please? I might be able to answer that. It's just not ringing a bell. Sharon's just asking for a record, so watch out for that tomorrow, Sharon, with an email. Rochdale South, Walid, we might need to do that one-on-one, mate. It's not sticking out to me there. Bray Park, yeah, just regular, just talking around Bray Park. So it's now come to the fore. It's contained in the Moreton Bay LGA. The metric health, so sales volumes are continuing to increase. That may mean that a lot of new apartments or houses have been released into the market, but days on market has been stable and decreasing, which shows or goes part of the way to say that it's not because lots of new supplies coming to that market, it's because it's just because a lot of new people are wanting to invest in Bray Park. And that may be, and I'm speculating, and Dave Ward's probably the expert in the area there, so come through me and send me a request and I can put you in touch with Dave for him to help you with the Moreton Bay area. He's who I'd recommend as a local area expert. He can give you a bit more detail around the whys in Bray Park, but that is where the new university in the neighbouring Launton suburb is coming online in 2017. So that may be a build-up and momentum of that happening and occurring in and around there. Rachel's asked, can we find sweet spots for off-market properties? So you can actually enter in any property address into our platform and see all of the same information. That way you can sort of assess your current portfolio. You can see if it's in a ripe house sweet spot. You can see if there's public housing around it. You can do appraisals on it. And it may be for a property that's currently off market. It hasn't touched the internet in any way. You can get and pounce on that if you've been able to find an off market property. Sorry, yep, Tim, Hugh, lots of suburb requests. I'm happy to take those one-on-ones if you'd like to pop me through an email, etc. Ipswich, Hugh. So I did a webcast last year on Hugh on Ipswich. It's sort of still there. It was around last October, November. I actually had interviews with the mayor, Paul Pasali, a local developer, a local property manager. Terry Ryder came online to our webcast call last year around the Ipswich market. So it's still doing quite good things. It's more smaller, so it's been quite a strong regional satellite performer for quite a long time, and I do think that's linked back to Paul Pasali, the mayor. He's very entrepreneurial and consistently bringing new sources of employment and population to Ipswich. So I think that's going to be quite the norm, but it's not. It's more of a slower burn. So there's no real localized or massively strong, localized factors that potentially driving that stellar growth, like the Moreton Bays, which the government has just, at a state level, the government's just drawn a big circle around Moreton Bay and say, we want to have 500,000 people living there by 2035. We've got a growth plan. We've got a new train line. We've got a Westfields, IKEA, a business park, a marina, a new university, etc. There's not that large scale, multifaceted utility that's been added to the LGA. It's, Ipswich as an example, it's just got a really good, slower burn, great entrepreneurial council. So in terms of the two, I think the stories are different. So Gold Coast is probably much closer aligned to Moreton Bay in terms of you've got some really big, heavy hitting growth drivers happening there at the moment. Interestingly enough, I really was trying to focus on, sorry Rakesh, on the Gold Coast tonight. It is our #1 growth market in our report. You've got a lot of suburbs all the way from Nerang, Ormeo, Varsity Lake, Southport, down to Tweed Heads, and then all down into the Byron Bay Shire that are doing some amazing things in terms of our growth metrics. In terms of a sheer volume of suburbs that are in our big greens, you've got Moreton Bay and Gold Coast right up there, half a dozen suburbs each that are absolute tip of the what we're seeing across the country, lion's share. But the reason why it's our #1 suburb compared to Moreton Bay, #1 LGA compared to Moreton Bay at the moment, is because investor interest is far more accessible. You can get into these suburbs and purchase, where Moreton Bay, it's quickly come out. Morayfield has been a really nice growth story. It's really hard to buy properties there, and you've got a lot of investors fighting over each other. Okay, I might leave it there. I hope you've really enjoyed this evening, found it useful. I can stay around now after I turn off the audio visual and answer any individual questions if you've got any, so do flick them through. I'm happy to stick around and answer any questions. Calling's coming out tomorrow. I really appreciate the time, and I'll talk to you soon.